All right, let's talk about SoFi. They just dropped a monster quarter, and today we're going to break down exactly how they did it. We're diving straight into their Q3 2025 earnings, pulling the key numbers right from their CFO's report to really understand what's powering this fintech giant. Let's get into it.
Okay, so here's how we're going to break this all down. We'll start with the headline numbers, the ones that made this a truly record-breaking quarter. Then we'll look under the hood and see where all that revenue came from. After that, we'll check the company's financial health, look at how they fortified their balance sheet, and we'll wrap up with their super optimistic new forecast for the year.
All right, first up, let's get right to the main event, the top-line results that really made everyone sit up and take notice this quarter.
And here it is. A record $950 million in adjusted net revenue. I mean, think about that number. This isn't just a new record for them, it's a huge statement that their growth engine is absolutely firing on all cylinders.
And just look at this momentum. That $950 million, that's a massive 38% jump from this exact same time last year. You know, that's not just steady growth, that's some serious acceleration.
And here's the part that really matters, right? Revenue is one thing, but profit is the name of the game. And they delivered $139 million in net income. And get this is their eighth profitable quarter in a row. SoFi is not just getting bigger, they're building a real, sustainable, profitable company.
So the big question is, where is all this cash coming from? Let's pop the hood and really see what's driving this thing.
Okay, now this is where it gets really interesting. This chart shows a huge strategic shift for SoFi. I mean, for the very first time, more than half their revenue, 56%, came from their non-lending businesses, their tech platform and financial services. This is a really big deal because it means they're not just a loan company anymore. They're diversifying, building a much more stable business model.
And when you dig into the details, it's even more impressive. Their financial services revenue just skyrocketed by 76%. And get this, for every single product a customer uses, they're now making over $100, a new record. Meanwhile, their other platforms are just chugging along, adding solid, steady growth. The whole thing is just a well-oiled machine.
But hey, don't think for a second they've forgotten where they came from. The lending side of the house is still an absolute beast. It grew 23%, and they originated almost $10 billion in new loans. That's billion with a B. Personal loans, home loans, they're seeing just explosive growth across the board.
All right, so growth is fantastic. We all love to see it. But is it healthy? Is it sustainable? That's the real question, right? So let's see what the CFO's report tells us about their credit quality and how they're managing risk.
You know, the message coming straight from the CFO, Chris Lapointe, was just pure confidence. He basically said their customers are doing great, and believe it or not, their credit performance is actually getting even better.
And this is how they do it. This is their secret sauce. They are laser-focused on a specific type of customer, people with high incomes and fantastic credit. We're talking an average income of $157,000, with FICO scores well into the 700s. So what does that mean in plain English? It means their loan book is way, way safer than your average bank's.
And hey, don't just take his word for it. The proof is right here in the numbers. Look at these charge-off rates. That's just a fancy term for loans that go bad. They're actually going down. For both personal and student loans, fewer people are defaulting this quarter than last. I mean, that's just a glowing report card on their credit health.
Okay, so their loans are solid. But beyond that, SoFi made some really big moves this quarter to basically build a financial fortress.
It was like this brilliant three-part play. First, they went out and raised $1.7 billion in new cash. Then, what they do? They used a chunk of that to pay down $1.2 billion of their most expensive debt. And all while this was happening, they were pulling in another $3.4 billion in deposits from customers, which, by the way, is a super low-cost way to fund everything else they do.
So, what's the bottom line here? SoFi is just swimming in capital. Their total capital ratio is at 20.2%, which is almost double what the regulators say they need. And their tangible book value per share, which is a great way to measure a bank's real-world net worth, shot up by an incredible 46% in just 1 year. This gives them this massive cushion, this huge buffer to handle pretty much whatever the economy decides to throw at them. So you have this incredible performance across the entire business, and that gave management the confidence to do something that always gets investors excited. They significantly raised their financial forecast for the rest of the year. I mean, just look at this massive vote of confidence. They've raised their targets for everything. Revenue, income, earnings per share, all up.
But the real jaw-dropper here is the tangible book value growth. They went from forecasting about $640 million to now expecting $2.5 billion. They almost quadrupled it. Why is that so important? It shows they are building real, tangible value on their balance sheet at a truly insane speed. It's a huge, huge signal of their strength. So when you put it all together, record profits, improving credit, a balance sheet that's built like a tank, SoFi is just firing on all cylinders. The numbers from the CFO's report really paint a powerful picture. And it leaves us with one big question to chew on. Is this the quarter that SoFi finally proves that the whole fintech banking model isn't just a cool idea, but is actually built to last?